ASNA Edge's live coverage of the March WASDE report. We are getting ready for the new crop season, and I'd like to remind everyone that the May WASDE will be the first look at the new crop and ideas about what we're going to see going forward, which we should see a pretty interesting year as we are in a transition from a period of much tighter supplies into where we should see supplies being noticeably larger. Looking at the markets here in pre-market trade, May corn right now, as you can see, is down 1/4 cent. July unchanged. December under a little bit of pressure, down 3 cents. Volume is pretty low right now, and obviously in front of a report, we're not going to see, that big of activity. One thing I would like to point out here is the strength that we've seen in soybeans. As you can see, we're up coming into this report, and we're holding the $15 level quite well, and we recovered very nicely from the sell-off that we had coming into the last bit of February. What's driving this is incredibly strong crush margins. We're seeing crush margins at historically high levels. And what that is, that's the processing margin that you make when you process a bushel of soybeans. And we're seeing, values north of $2, which is unusually high. And a lot of that is being driven by right here, the soybean oil has been particularly strong, and that has pushed prices up noticeably and improved crush margins. What this does, that increases demand for soybeans. If you're making a lot of money processing them, you're going to want the beans. So we could see a bit of a dichotomy here where we might see corn struggle a little bit, but the soybeans have this nice built-in support, which is really doing a lot to help prices. Moving on to the wheat, wheat is still under a lot of pressure. My current thinking on wheat, and understand this could change by lunchtime, is that the situation in the Ukraine was very acute. We saw prices spike up sharply higher, north of $12 a bushel in some cases, and they've since come back completely. The situation in the Ukraine is not improving, and it's not improving for agriculture. And the amount of crops that we actually get planted may be noticeably smaller. We have to think about what kind of fertility that we have with that. And that is something that could lead to tighter supplies down the road. Along with this, we've had the Russian situation where Russia has been able to dump a lot of wheat into the market. The U.S. is not that big of a participant in the export corridor. And with this Russian moving of wheat, sometimes at below market prices, that has certainly kept a lid on the futures market, and the speculative position in the wheat remains a big fund short, and they've endured this short throughout all this volatility. So maybe there's something for the wheat down the road, but right now I would expect the wheat to continue to struggle. For those of us, interested in the cotton market, cotton prices have come off. Cotton has been extremely challenged in terms of getting any sort of volatility or trading going out. We've seen right around the $80 level being the low. We try to push up close to 90, and that attracts sellers. We're going to need to see something extra to make the cotton market go. This could be better U.S. demand. Maybe people start buying clothes a little bit more. Maybe some better export demand. The ideas about China reopening is going to be good for the cotton market. Along with that, we've had the situation after the earthquake in Turkey. Turkey is one of the biggest producers of yarn in the world. And with their yarn infrastructure having a problem, that's obviously a bearish thing near term. But if we can see China reopen, that may take up some of the slack. Looking at the livestock market this morning, cattle have had a really solid run. We've seen cutout values, particularly for choice, they moved to a new high for the year. Just a couple of days ago, they've eased off a little bit, and there may be a little bit of nervousness. We haven't seen the cash market pick up and move. Something that's always on people's mind is energy prices. And crude oil right now, we're at $76.69 a barrel. We're down about 90 cents. We've seen very, very good resistance for crude oil at $80 a barrel. We moved up and touched almost 81 yesterday, and the market hit a wall and reversed and took a $1 gain and turned it into a $3 loss. This is good for the economy. This is good for inflation numbers. It's good for everybody's pocketbook. And particularly, we're coming into that diesel time of year. We're going to be planting here real soon. The current prices on diesel have come down nicely, and we've also seen unleaded. Also, natural gas prices. And just to show you how much natural gas has moved. We've got about 10 minutes before the report, so I'm going to go ahead and punch up a chart of natural gas here. And this is, I'm not saying this is going to happen to the corn, but this is a cautionary tale about what markets can do. And let me punch up this chart here real quick. And we'll switch my screen. To that. And as we can see, natural gas prices have taken a mighty, mighty slump, and we've fallen more than 75% when we hit this bottom here. The market tried to bounce, but again, we found resistance. We've got a couple of things going on with this. U.S. natural gas production has improved some. We also have had a fairly mild winter both here in Europe, and that has been able to ease on demand a little bit. One thing to keep in mind, the U.S. is a big exporter of natural gas, and we are going to see natural gas exports into Europe increasing noticeably as one of the big export terminals had an explosion a year ago. That is being rebuilt, so we are going to see more natural gas exports. So this is going to probably lend some support to prices. The good news is this has helped fertilizer prices come down meaningfully for this new crop year. One of the features of last year's crop was, fertilizer problems. There were some issues getting fertilizer in some places. There was also the extreme price run up. So last year's crop did not see the level of fertilizer put into it as a whole that we would normally expect, and this caused variability in yields. This is something we're not going to be seeing as much going forward into this new crop year. So that is going to open the door, to potentially higher yields. And as we know, last year we did see yields suffer quite a little bit. And with that being said, we are probably going to have a situation where we are going to see higher production, and we definitely have that coming out of South America. And that is going to be something that's probably going to pressure the markets coming through the year, assuming we see normal weather. On the topic of weather, there are ideas that we are going to move away from the La Nina and most likely move to a more neutral orientation. And that is something that will result in seeing, more rains, particularly here in eastern Nebraska. We have a miserable drought. Is going to mean, again, chances for bigger crops, and bigger crops usually mean lower prices. So turning to today's report is a look at old crop. This report and the one in April will be old crop's last hurrah. And with these reports, they typically do not change anything in the production numbers, meaning acreage will stay the same, yields will stay the same. So the variables that we're looking at to affect the ending stocks number are really going to be exports for corn and soybean crush for soybeans. Those are going to be the two big things that are going to affect the ending stocks number. And right here is the corn ending stocks number, and right now we're expecting that to be 1.3 billion bushels. And that is a little bit higher than the 1.267 we saw last time. And when I did my own WASDE estimates, I pushed them up. I didn't push them up quite that high, but I did take 25 million bushels off of exports, and that's increasing the ending stocks. What's important about this number is if you're a fund trader, generally looking at the markets, the smaller this number, the better for prices. So if we see a number, let's call it 1.45 or lower, that number is generally supportive to prices. From 1.45 to about 1.6, 1.65, that is more of a neutral paradigm. We start getting north of, 1.7 billion bushels in the bin as an ending stocks number. That becomes bearish for prices. particularly if we see prices at an elevated level. So this export number last time around, it was 1.925. We may very well see that go down a little bit. Moving on to soybeans, the guess is for 221. And that is pretty much in line with what we saw the last time at 225 million bushels. My own estimates, I put it in at 200. I actually cut it because I actually raised exports a little bit because we're doing a pretty good job of seeing exports come in. China's been pretty good about things over the last couple of months, although the last couple of weeks that started to slow down because we do have an enormous Brazilian crop that's coming into the market. So I also added a little bit into the crush. This is a new feature in the soybeans. We're starting to export soybean meal a little bit more than we have, and we're going to have new crushing capacity coming online, and that is going to increase domestic use of soybeans, which is something they don't build crush plants very often, and I can't even recall when the last new one after this new batch of these two new ones we have coming online. But we are going to need that soybean oil to provide for biodiesel as part of the biofuels mandate. And this is something that's going to definitely help soybean prices. And in turn, that can help tighten up the corn acres a little bit. And that is something that's going to be a bullish input because my ideas on ethanol, we don't have a problem now, but miles driven in this country by normal drivers have not increased at all. In fact, they're under a little bit of pressure, and we have three things driving that. One, younger kids, not only do they not care about what kind of car they drive, they don't drive nearly as much. They're much more willing to sit and play on the phones, play the video games, things like that, and they're getting their driver's licenses later in life. Second demographic problem is we do have an aging population. As people get older, they tend to drive less. And with that happening, we have that pulling on demand and post-pandemic and the work from home phenomena. So we have people not driving to work as much in a lot of places. And that in turn is also something that's keeping gasoline demand a bit capped. So when that happens, that's a little bit of an issue for ethanol. It's not so much an issue for diesel. We don't have really any competition from electrical vehicles to speak of. Into the amount of commerce that we're going to be doing in the United States is going to be changing. If you haven't heard of the concept of reshoring, what that is changing the supply chains from those brittle supply chains we saw in the pandemic when we had the toilet paper shortages, the chip shortages, and all of that. A lot of that is coming back to the United States. It's coming into Canada. It's coming into Mexico. So there's going to be more need for, obviously, things being hauled by train and by truck. And that is going to be something that is going to be supportive to the diesel category. And in turn, that will be supportive to the soybean oil and things of that sort. Moving on to cotton, not looking for a lot of big changes in the cotton market here. When we looked back at the USDA Outlook Conference, the cotton kind of struck me as the potential to where we could see some volatility simply because we were looking at reduced acres and substantially higher yields for new crop. So that creates some inherent risk due to supply issues if we have a weather problem. So we have those things going on within the cotton market. The other thing that we're going to be looking at is going to be these world numbers and these South American numbers down here for corn in Brazil. Actually in Brazil, 1.25. That is a huge crop. And they're putting it in and conditions are good. They're probably going to meet that number. 153 million metric tons of soybeans. That is going to be record production for Brazil. And I know Brazil likes to advertise that they're going to have record production. Well, this year they're going to make it. So we're about 30 seconds now away from the report coming out. And looking at March corn, it's up 0.75 cents. And new crop is down 1 1/4. And May beans are into the report. They are up 9.5. So we'll see what kind of volatility we get here in about 15 seconds when the report does come out. Other things we're going to be looking at are wheat, world ending stocks for wheat. That's another spot where we could see a potential surprise if we do see some tightness in global supplies here. And it's report time. And looking at, what do we have here? Corn ending stocks. noticeably higher, 1.342. That was way above expectations. Notice right here the exports. I cut them by 25. The USDA cut them by 75. So a noticeable drop in corn exports. Moving on to soybeans, we came in at 210, so we were looking for 221. So we kind of split the difference right there. We didn't see any changes in the production numbers. The cotton numbers were left unchanged. Moving on down here to South America, Brazilian corn at 125 was unchanged. Soybeans were also unchanged at 1.53. So again, no surprises, but those numbers are bearish. The Argentinian numbers were something that were in question. And this is something where we do have a little bit of bullishness going on. Looking at soybean production here, we're noticeably lower at 33, down from 36. And corn production in Argentina down to 40. And that's down from 47 last time. So while we're getting more corn out of Brazil, we did lose 7 million tons to Argentina. So that is kind of helping the market out a little bit. Looking at the market reactions here, we have May corn right now. It's actually upward at 635. That's up a penny and a half. And we'll go ahead and switch to a chart here. And as you can see, we are ticking pretty much right in line with where we were. The market had this slump here. This was a lot of fund liquidation. One thing, the COT reports are still behind. The CFTC says that they're going to have them available by the middle of March. So hopefully we can get some fresh data. And we're going to see that the fund position has shrunk noticeably. That fund position was largely concentrated in old crop, and that's what created the pressure. What they're going to do with new crop, well, we still have too many variables to get a lot of fund participation, but they're going to need a story. They're going to need something telling them to come in here and buy this. Moving on to the soybeans. Soybeans like what they see here, and we can see that prices have moved up, and the nice uptrend that we've seen in soybeans is continuing, particularly in old crop, and that is, a function again of these strong crush margins. And taking a look at the wheat in Chicago, show that up here. The Chicago wheat, not too much changed here. We were down about 4 cents coming into the report, and we didn't see anything here that's really going to move the market. One thing I would note is we're deeply oversold here, and we've broken through. We're trading well below the levels that we saw during the Ukrainian invasion. In fact, we're down to areas that people might want to call cheap. But you can see we've had a moving average cross and something that's created a fair amount of pressure in the market. Looking at what we got for the wheat ending stocks, that came in at 573. That was a smidge higher than what we had last time around, and the export number was unchanged. As far as soybean exports, they put those exports back into the picture. They put 25 million back into the export category, which I think is protein. And after our trade spat with China, we did see a lot of new customers for soybeans, and that's something else that is supportive to the soybean market. And soybeans are holding their gains, and corn remains choppy. The new crop is under a little bit of pressure, but again, we weren't looking for anything too big out of this report, as this is I wouldn't call it marking time given the fluctuations that we're seeing in the exports, but typically these reports don't have a lot of big surprises. When we get to May and we start getting out to July, we're going to see reports that have a lot more movement in them, and that will be something to keep an eye on, because we are going to be entering a period of higher price volatility. And with that, Ashley, did we have any questions?
No, sir, I do not see any questions.
Well, given the fact that corn's only up 1 3/4, and the report was, while a smidge more bearish than expected, was in general pretty much as expected, I think I'd like to thank everybody for being on. Make sure to tune into our podcasts. I do 3 a day. I do 1 in the morning, and I do a livestock. I do 1 in the afternoon. We cover activity in every market, because we do have a lot of things going on in the outside markets particularly with interest rates and where the economy is going, and I cover all of that as well. Make sure to read today's DMO. There will be a full breakdown on all the WASDE activity and all sorts of key talking points. So when you're at the cafe or wherever, you can try and be the smartest guy or gal in the audience. And with that, I'd like to thank everybody for attending today. This is Sterling Smith from Omaha, Nebraska, wishing everybody a great day.